What is up, Mr. Dino? How you doing? Yeah, we're looking a little bit bullish. Yeah. However, it's time for caution, I think. No problem staying optimistic, but let's not get ahead of ourselves, so to speak, and I'll get into that. All right, 1 second. Let me just adjust the volume of this music a little. I think that should be okay. Let me know if that's okay or if it's too loud or whatever. So, where did we last leave this stream? I think sometime yesterday. Let's see. So we're currently the 30th of January. On the back end of January now, getting there. Stream yesterday, we saw that move up, didn't we? And then we pulled back again. Yeah, okay. So since then, yeah, we got a bit of a fake out from the triangle here, the symmetrical triangle. And then ever since then, we've just been gradually rallying up here. And we've actually pulled in a new high for the year. So I'm going to have to move this line, actually, this 2023 high. Now gets to come up to here, just below 24K. Psychological number, $24,000, big round number, right? 24K. If we go on the daily and look left, what happened around 24K the last time? You know, it was a lot of wicking, you know, a lot of wicking when we first came up to tag it. So we didn't quite get some, you know, power moves above 24. So it's quite resistant. We had maybe 4 or 5 days where we had some action above 24, but the moves to 25 was just wick, daily wicks. So when you see this, guys, when you see long wicks on the daily like this, and they're all like in succession of each other, like close together like this, that signals like there is a lot of sell pressure, consistently sell pressure. You know, it's some kind of a top, some kind of a pivot. And so let's compare that with what we have right now. Do we have like that heavy wicking on the top? Let me hide the drawings. And I would argue not yet. We've got 24 minutes left in this day and the candle is still quite solid. So if we can keep our candles looking like these, see the ones down here, how they sort of stacked on top of each other, you know, that could be enough of a suggestion of a move higher, you know? But look, I think what we're at right now is quite a tough point of resistance, so I don't want to get anyone's hopes up, you know, by what I say. You got to keep it real, and you got to be aware, or always humble to the fact that we could start to do a corrective move. Now we're only a couple of days out now from the funds rate decision, so that's not far. Let me get the events lines up here. You can see, look, this kind of feels like we're rallying into what the market is forecasting as positive news for the funds rate decision. You know, we haven't had a 25-point hike, you know, which is quite a, it's still a hike, it's still an increase to the interest rate, but it's a weaker hike because we've been through a bunch of 75-point hikes and just recently a 50. So for them to be like forecasting a 25, that's kind of hinting that the Fed's starting to ease off a little. But we still have to get the result, don't we? Like it's all very well and good to forecast it, which is probably like what all this bullish activity is about, because everyone's sort of like expecting 25 basis points. But we have to be aware of the possibility of a 50-point hike, which would shock the market. Actually, I think markets wouldn't react favorably to that. So keep that in mind, guys. Like, be careful of this funds rate decision. Don't count on it being 25. You know, the forecast is 25, but don't count on it. Just be cautious. If we get 25, then awesome. You know, that's great. There still could be a sell-off around the funds rate because, you know, a lot of funds rate are, you know, we rally up into them and then we dump out after them. You know, this one we actually dumped into it and then rallied after it, which was interesting. But it's unpredictable, like funds rate days, that, you know, whether it comes in negative or positive, it's hard to really gauge like what will happen after it. So be careful and be aware that a dump or a pump may happen at the funds rate day. So caution is the key. When things settle into a trend after the fact, though, then that'd be great. Because then we got 2 weeks of build up to the CPI. And my projection, I think this is going to be a good number. Like, we want this to be low. We want inflation down. Markets want to see inflation come down so that they can go risk on, you know, they can go up off the good news, right? So that's what I'm looking at there. What do we got? Like about 22 minutes left of the day, 21 minutes. This move, at least on the hour time frame, it doesn't seem to have been exhausted just yet. This big red candle that we had, for my time frame, it's 6 o'clock that happened, but that was a reaction to being so close to that 24K, you know, big round psychological number, right? I'm pretty sure people sort of getting a bit hesitant of holding anything through that level and maybe like taking profit before the wall, basically, which is completely understandable, completely reasonable. I was one of those people. I actually took profit on that big long trade that I've been in. And, you know, I got out in profit, which is great, you know, and now I've got the freedom now and the flexibility to pick my next move, and I'm going to be patient because I want a really good one. I want a good setup. I'm not looking for setups at the moment. This is too risky. Being so close to a big round number, I feel like there's still a fair chance that we could reject off it and come back down, and maybe that rejection will produce a good setup for a long. Or I could even look at maybe taking, you know, it's risky, but like taking a short, because, you know, as we know, like Bitcoin does like to do these swing failure patterns, like where it gets above a previous high just ever so much to lure in the bulls and thus trapping them after, you know, they subsequently plunge the price back down again, right? So that could be another option. The way I'm going to approach it, I'm probably going to be doing it off like the 5 minute or maybe even the 15. I'm thinking the 5, just because like I want to use a little bit of leverage. I don't want to go crazy with leverage, but I want to use a little bit just to make it, you know, make the most out of it. But yeah, like I can't really, I know I've got a bias, like I want to see it go up, like I want to see Bitcoin gain value, but I'm trying to keep it real. I want to be open to the possibility that it may get rejected at 24, or maybe we've seen the rejection already. You know, like, I mean, what we're dealing with now is a lower high right now on this small time frame. However, for the bullish side of what's happening right now with price is this. We've got an A, B, C, and so far D's there, right? This is another triangle setup, just like what we came out of. It's just on a smaller scale, right? But obviously D could change its positioning here. We could get it down here at some point, but look, we're heading into the close of the weekend, so then we might see a bit of volatility. We might see some action. Let me hide the Bollinger Bands and the EMA cross. So yeah, that's kind of like how I'm going to play this. I'm going to keep my eye on the EMAs and the Bollinger Band. I want to make sure if I'm going long, I'm only going long when price is trending above the yellow line, the 200 EMA. Or sorry, is this an EMA? Yeah, EMA. So this 200 EMA, I want to see price trending above it, and I want to see evidence of price leaving the bottom of the band and then re-entering into the band on some kind of, you know, upward directional structure. Now, the reason I'm saying is like I'm not too confident taking a position at the moment is because this trend is quite stale. We've been trending on this one, at least on the 5-minute chart, since this breakout here. And, you know, there's going to be a point where this runs out of steam and it does like start to dip back below the 200. You know, I want to catch, if I can help it, I want to catch a fresh trend. I want to catch price as it's just coming up out of up over the 200. And, you know, to really snipe out my entry, I'll wait for a pullback into the band, something like this. Something like that. You know, proof of support, proof of a higher low. So like you can see here, these are a good example of higher lows, right? Of that structure there. So, and, you know, band support. This candle here, this bullish engulfing candle was excellent. This is the kind of entry that I'm talking about. So stop loss below the previous wicks like this, and then take an entry when there's evidence, like big evidence, bullish engulfing candle, candle closing back inside the bands like this. And that would be like an example of a good entry, a safe entry with a tight stop. Because if I'm wrong, I want to be out of it. I don't want to make the same mistake as I did 6 months ago, 5.5 months ago, of staying in something and just hoping that it's going to come back up and collect me. So stopping out of bad positions and taking signal off indication setups, like so setups from the indicators, that's me moving forward. Low leverage, so I'm going to be using like things like, you know, 2x, 3x with a large margin. So I'm happy to risk the large margin if I'm on low leverage and if my stop is responsible. I've got a responsible stop loss. And I'm just following the rules. Like I'm only going long when price is above the 200 EMA. And I'm only taking an entry on the pullback into the bottom of the band, you know? So, you know, I'm sort of trying to stack as much probability on my side as I can manage. Crypto Al, how you doing? Sup, Slick Rick, says Crypto Al. So yeah, that's me moving forward for the style of entry. I know I've talked about this method of getting in on previous streams, but you can do this on any coin. This can be done on Bitcoin. It can be done on Ethereum, Dogecoin, AXS, you name it. Like this strategy will apply to that. And the beautiful thing is, it works on every time frame, guys. You can take this to the hourly chart. You can take it to the 4-hour chart. I mean, you have to be patient to get those signals, because the last time we got that setup of what I'm describing was all the way back here in the early part of the new year. You know, look, here's the setup. Cracked above the 200, like here. Okay, that's That's kind of condition number one. Now what we want to see is support. And look, this thing took off and it never looked back. Like, we haven't even come back to the bottom of the band until back here. So this band squeeze was welcoming you. Hey guys, look, I've calmed down. I'm holding the band. Like, I've dipped, I might, you know, I've come down pretty close to touch the bottom of the band, but I've got proof here. I've got evidence. I'm showing you guys that I'm holding my value. And, you know, ever so slightly increasing. Like, we have to really like stretch it up like this to see what Bitcoin's trying to tell us. And that is that he or she started a low, pulled in a higher low, and then pivoted back at a higher point too. So that was just so much indication there. And look at this 4-hour candle, this beautiful engulfing bullish candle here. You could even get in late on that. Like, you could get in at the open of the new one, like somewhere here, and then have your stop set below the pivot, like here, and just let it do its thing, man. Like, let the bands expand. And look what we just came off the back of. Another opportunity. Another Bollinger Squeeze on the 4-hour. Look, squeeze, squeeze. Is price above the 200? It's miles above the 200, so we're very bullish on the 4-hour chart. We've just come out of a Bollinger Squeeze, which took like a week. It felt like a week anyway. How many hours is this? It took like a good, you know, I'm gonna say 3 days and 16 hours to get that squeeze done. But we've been chopping since last weekend back here. Now I have to increase the range of the weekend because it's all the way up here now. What is it? 239.60.47. 239.60.47. Okay, there we go. That's our weekly range, our weekend range. So it's actually, now it's starting to look similar to the previous 2 weekends of the range that we're dealing with. Yeah, smash up the like button, guys. Subscribe to the channel, hit the little bell notification so that you know when I go live. I go live pretty much every day. I try to anyway, if I'm not busy. So yeah, look, what are we, the last 12 minutes of the weekend, you can see where the weekend ends right here. This white vertical line, this box. So it's actually been a pretty good weekend. Like, we've been spoiled compared to, you know, our bear market weekends were just no volatility, you know. But yeah, look, this has been awesome. Like, these ranges are massive for trading Bitcoin on leverage, right? Really nice. So measuring it, so those pink lines there, that's last weekend. So when we started like breaking out convincingly above last weekend's highs, it was like, okay, now we got now the game's on, you know, game on. And then we've rallied up since. So we're hoping that this bullish wedge hole, this pennant, this triangle, right? Hopefully this stays alive and we get a break to the upside, but we'll see. 10 minutes left of Sunday right now, according to TradingView. I'm going to turn the indicators off and we can just watch the price action here. Let's go back down to the 5-minute, get a bit more resolution. But yeah, by no means is this uptrend over. It hasn't ended yet, guys. We're pulling in higher lows. Just look at the trend here. Look how great that is. Very healthy uptrend. It's got pullbacks. It's got a, you can see a trend line. You don't even really have to draw it, but it's something like this, right? Got your lows. And yes, there's a bit of action below the trend, like here. Deviated away, but the bulk of the action has been at this line here that I've just drawn, this red line. So keep your eyes on that. Let me make it a different color? I'll make it yellow, like widen it a little bit. And yeah, now, how you cut this trend line, it's you know, it's up for it. That's the subjectivity of trend lines, right? You know, do you chop the wicks off? Do you chop some of the bodies off to meet the bulk of the structure? You know, that's up to you to decide, you know, how you want to draw it. But I want to treat it more as a zone, a trend zone in this case. So something like this, something more like that. There's like some kind of zone that exists there. And it's maybe a little wider just to compensate for that dip there. But for the most part, yeah, that's what we're dealing with, guys. Support side. And look, like as we inch closer to the end of the weekend here and into Monday, it's looking pretty good. No signs of any kind of pivot or reversal just yet. When we see it, we'll know. Like if we break this uptrend here, like convincingly, like with you know, not only a break through it, but like a lower high, that like this kind of signal here where we get a lower high, that's telling you that this pullback's real, you know, if it was to do that. But we're not there yet. We're still in the game. We're still pulling in higher lows. So like low, low. See how they're just climbing? It's like an escalator. Higher lows, higher lows. Just, you know, be careful. Don't put your expectations so high. You want to rein it in and stay realistic, because as we know, trends don't last forever. They do get broken sometimes, and we want to be humble to that fact that this could break down at any moment. But yeah, like if you are trying to take a position in Bitcoin because you think that we're going to rally into Monday, then my stop loss would be, you know, responsibly just a little bit below the pivot, like say here, or if you want to get a bit more risky, like below this pivot here, like if you think it's going to wobble out a little before taking off, something like that, right? That's how I would play it. But look, it's looking all right. Let's get the EMAs happening. We've dipped below the 200 EMA on the 1 minute chart, and let's get Bollinger Bands on. Let's treat this as a FOMO, like, well, it's not a FOMO, it's kind of like you're looking at our trend where we seem to be finding support over the last, you know, however many hours, and you're sort of projecting that we're getting a reaction. We're getting an example of support here, example of support here, example of support here. You know, taking a position where we are right now, I would want to set the stop. You know, let's say we're here. I'd want to set the stop, you know, probably here, right? Because I don't want to be in it if it starts to correct. And let's say, yeah, I just want to get the thing moving. Whoops. Where are we? So here, this one. Obviously the target doesn't matter right now. We just got to focus on staying healthy to begin with. As in, like, you know, not stopping out. Like, that's the first thing. That's the first port of call. So we're already dipping off this, like, sort of early entry. I'm kind of defying the rules here a little bit. It's much better to get in on positions that are, like, close to the bottom of the bands, you know. So while I say that, let me put up the little warning, the trade warning, that this is hypothetical. And it very well could stop out. We're still 5 minutes out from the daily close. Let's see how this behaves. We'll see if we get, you know, we'll see if we're pivoting, put it that way. Like, Like, is this trend gonna hold? That's the big question. You could even be a little bit more generous and get that stop just beyond the bottom of the band here, because the band is squeezing. And you know that a Bollinger Band squeezing provides a setup for a position, guys. Try to avoid taking position in something that is causing the bands to expand, right? Don't take positions in expansion, take them in contraction. So when the bands are tight, you're a lot safer there because your stop loss is only going to be, so far away. Whereas if you do take your position in expansion, like let's say you got in on this pullback here, your next pivot down was down here. So that's a wide drawdown to the stop loss. So when you wait for the bands to squeeze, your position and your stop loss can afford to be a lot tighter, right? You're less likely to get stopped out because it's squeezing down. Like the volatility would be low at that point. So this is shaping up to be a terrible entry. It's already in decent drawdown here, but we're hoping that the trend holds us. And look, if you think, like, if you have the projection that, your TA points to a move up, you may get stopped out 3 or 4 times before you finally catch, the right pivoting point on the chart, right? So I'll show you what that'll look like. Like if this stops out, I'll show you about getting in on the right signal again. But yeah, we could see in 2 minutes, this could be like a Monday dump out. Like this could be a start of a correction. We don't know that yet. Be patient and just see how it plays out. What do we got? Like less than 2 minutes, about a minute and a half. So Sunday was awesome. The Sunday candle, the 30th. Well, it's Monday now in Australia, but Sunday the 29th was a brilliant day. What do we got? Daily starting very soon, 1 minute left. Is our silly position going to become clever? That's the question. Are we going to stop out and look like an idiot, or are we going to start coming back up and going into the profit zone? That'll be interesting. Crypto Al, you're most welcome. Thank you for the kind words there. Appreciate it. Yeah, share it, guys. Share the channel. If you think it's valuable content and analysis, then yeah, by all means. See how you doing, man? And Aaron, how you going? This looks like it's going to stop out. Remember that little trade we got into yesterday on Litecoin, that hypothetical one? That turned out, because it came similar. It came so close to stopping out, and then all of a sudden we found some support and then started rallying up, and then it really came up, and that was a nice trade, or would have been. Okay, there we go. We stopped out of this one. So we don't want to realize any more damage if we were to keep this open. So it's good to stop out. You were wrong. Get over it. Look for the next position. So now that this is coming down, we're below the 200 now. It was a silly entry because I didn't get in at the band, right? The Bollinger Band. We want to make entries as close to the opposing band as possible, like that, or like this, with a stop loss set. So All right, we're getting a bit of something happening here. We're into the new day now. So the weekend is over. We're now on a Monday. UTC Monday. Let's FOMO in here and set our stop here. You know, we're gonna keep, if we think that there's any kind of positive move on the cards, this is one way to go about it. If you're happy to stop out 3 or 4 times before the move takes off, because there's a point, there will be a point where you catch the trend, you know? But maybe, yeah, maybe have a limit to how many signals that you take and respect your stop losses. And, you know, maybe you can have a personal rule, like I want to stop trading for the day if I stop out 3 times in a row, something like that. Because, you know, if you keep going, you're gonna lose a lot of money. You're gonna bleed out. But the point is, you want to get into something that is lasting. Like you want to get something that lasts a specific amount of time to not only cover the small losses from stopping out 4 times or 3 times in a row, right? Because that'll sort out once you get up, you know, into profit. Like it'll sort out, it'll cover the small losses that you made. But what we're trying to do is catch something like this. See, like this move here would have been really cool to catch. And maybe you were trying to catch it like coming down through here and you missed it. But then finally one of them stuck. So on this coin, it's the 4th one that's stuck. And then you rallied up and captured all that. So it's one way to look at it. So this one hasn't quite stopped out yet. It's looking dangerous though. It's looking a bit sketch. Oh, still alive. Still alive. I'm going to respect the stop loss. I'm not going to move it. If we stop out, it's the 2nd stop out. There we go. We stopped out. Okay. Let's let this develop a little more. Give it a couple of candles. So that's 2 stop outs in a row. Let's just go for 3. So I'm going to wait. Now that the activity is outside the Bollinger Band here, like the price action, we want to see evidence of a candle re-entering the band, just like kind of what it did just there, but we want to see it close in the band. So that's, yeah, we're still waiting. Look, this is starting to downtrend here. All right, here we go. Here's a little bit of a recovery into the Bollinger, back into the Bollinger Band. So I'm going to be setting this pretty shortly. When it closes, maybe. There is, I guess, a way of like preemptively, like if you see this kind of action, you're like, yep, screw it. I'm getting in like here. Because it's already sort of taking off a little, huh? It's got 15 seconds left. Price can do a lot in 15 seconds, by the way, so you can sort of miss the opportunity. But if you think if you're positive that it's going to close quite strong, then yeah, this is a bullish engulfing counter. Okay, let's go here and let's set the stop here. So this is attempt number 3. It could get stopped out, and that's, you know, that's part of trading. We're below the 200, so it's not a quality entry. It's not very high quality. But I think, yeah, if you stop out 3 times in a row, it's not looking great. Like,